Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader and explorer. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. My dear friends, before I proceed with the video, I would like to mention that I'll be out of station on Monday and Tuesday. So my videos will be back again from Wednesday. So no videos on Monday and Tuesday. So be careful. Okay. So as we all know that this week was crazy, there were many ups and downs. Okay, most of our levels worked, so as a result we had a good week, but yes, some bad trades too. So finally the market is closed, so let's look at the market now. First of all, DXY, though the old correlation, the previous correlation of gold and DXY is not going well right now, but as a forex trader, it is our duty to know, okay, what is happening in DXY. After all, US dollar is the most popular currency and most traded currency in the whole world. So DXY closed at 103.11, and DXY's this massive candle gave us the confirmation that bulls are very much serious right now in taking the market up. So in case DXY starts falling also, okay, it should not break this level, okay, without any news. Technically, we have a strong support around 102, 101.90 right now. After the market opening, there's a high chance that DXY will be heading towards the level of 103.50 here. So we need to watch DXY whether it breaks 103.50 and hits higher or not. Okay. Now, if we look at the chart of US government bond, then yes, US government bond has been playing a very critical role for all of us. In our previous video, we discussed about the importance of the low here because market was constantly forming lower lows, and as a result, we were seeing extreme bullishness on the chart of gold. But this time, US government bond did not break the previous low. Rather, it took support and it is trying to go up now. Though the market structure is weak because market was constantly forming lower highs, but market here from a higher high. So overall, I think that there will be some recovery on the chart of bond. Let's wait and watch. Now let's talk about the gold. So gold closes lower but remains above US $2,000 as banking woes send investors to safe haven. You can see gold price fell on Friday but clung above the $2,000 mark for second day as investors move to a safe haven assets amid continuing worries over the health of the banking sector. So the overall sentiment on gold is still up. If you look at the chart of gold also, you can see that yes, there has been some correction, but if I zoom out the chart, you can clearly see that the market sentiment is still bullish. You cannot deny that the trend of the market is still very much up. Yes, we do have a double top kind of a pattern. If I take you to the higher time frame, let's say the weekly time frame, okay, you can see this is a weekly time frame, and on the weekly time frame also it looks like a double top kind of a pattern here, and we also have a clear divergence on the chart too. So yes, there is a possibility that we may see some correction in the coming weeks, but if you're a day trader, then it is better for you to trade from level to level. Okay. And to be honest, I also do not hold my positions for a couple of days and then weeks. I am a hardcore day trader, so I also try to trade from level to level only. So at first I was looking at the Forex time frame, my favorite time frame, and to be honest, I was not confident on the levels that I was getting. So as a result, I moved or switched to the 1 hour time frame. So today's video will be based on the hourly time frame. Okay, so first of all, we have a good support around 1968 to 1967. We have a good support around this level. So after the market opening, if market starts falling, okay, if you see market starts falling means market closed at 1978. So after the market opening, if market is coming down, I'm not talking about big sell-off. Usually we do not get to see much volatility craziness on the first half of Monday. So if you see that market is more or less quite normal and it is coming down, then you can expect the market to get some support around 1968-67 level, because we can see presence of buyers around this area because of Fibonacci 50% retracement level, as well as we also have previous price rejection around this area. So if market comes down, then definitely market will get some support under normal volatility. If market takes support and bounces, you can go for a buy position. And in case market shows extreme volatility, yes, some exceptions do exist. So in case market shows extreme volatility, you need to be careful. Wait for the market to settle down till at least European session. Okay. So first buy opportunity is on 1968, 69, 67 level because of this Fibo 50 as well as previous price ejection around this area. Then we have uh, second buying opportunity around 1960 to 1955-54 level, and the reason is again we have Fibonacci 61.8 plus strong price rejection around this area, and hopefully by the time the 200 moving average will also be present in this level. So these two are the logical support levels or buy opportunities on the chart of gold right now. First one 68-67 level, and secondly around 60 to 55. This is a big level, so you need to be careful. You can switch to 50 minutes time frame and just wait for price rejection from below. Once you get the price rejection from below around 58 level, 59 level, you can clearly go for it, but your stop loss should not be your stop loss should not be above 55. It should be around 53, 54 only. After the market opening, if you see gold going up, then yes, there is a good possibility also, because you can clearly see that market close at the Fibonacci 38.2% retracement level. So yes, there is a big possibility, good possibility that after the market opening, gold will be going up. If you already have a buy position, be on the trade, nothing to worry. If you want to take a buy position, yes, you can go for a buy position, but keep in mind that you need to follow proper risk management. Do not go for a heavy lot size, because if you are a forex trader and if you have been trading on forex for the last couple of months and years, then you know it very well that Friday evenings and Monday mornings can be a little bit tricky. They can be a little bit dangerous. Okay, so be careful. Okay, if you go for a usual lot size of, let's say, 0.5, then try to avoid 0.5 and go with a lot size of 0.1 or something like that. Okay, so if you want to take a buy right at the market opening, you can go for it, but be careful and always follow proper risk management. On the chart of gold right now, I will not be giving you any resistance levels, because I'm not coming on Monday, okay, to update you if something bad happens. Okay, so the only resistance level on the chart of gold seems to be around this here, the previous high made by the market, and the level is 2003. Okay, so 2003 can be a resistance for day traders, not for swing traders. Okay, can be a resistance for day traders if the market is not much volatile, especially during the European session, Asian session. Okay, you can expect the market to reverse. If not a complete trend reversal, you can expect a profit of 40-50 pips. Okay, but the good resistance level or the better resistance is around 2010. Okay, so swing traders, position traders, if you're looking for a buy position, then you need gold above 2010, because gold needs to cross 2010 so that you can call it as a proper breakout. Okay, so swing traders, position traders, if you see gold breaking 2010 comfortably, go for a buy position, but day traders, you can look for some sell-off opportunities as well. So be careful. Overall, the market sentiment still up during the weekend. Okay, if any news comes out, then the sentiment may change, because this market is extremely volatile right now because of the ongoing tensions throughout the world. So be careful. Stay in touch with the news. Okay, that will be very, very helpful. All the best. Bye bye. Take care. As I always say, capital protection should be your first priority. So do not gamble. Bye bye. Take care.